Good morning. Well, wild times for sure. Markets were down considerably when they opened last night. You all probably know. I think they were down in the area somewhere around minus 1,000, then locked up, started trading again. And now there's Fed news, and markets are ripped up here to the upside. So, assuming that they're going to open up somewhere in this area in the next 25 minutes or so, we're going to have a sizable gap up and a bullish gap up that you can see the retracement into the S&Ps. And this is going back. Let's just look back at last week at the price action there, which was setting up for, a possible up day on Friday that just fell apart. So this little consolidation here, and then the breakdown of the bottoming tail bar is just a classic bottom action type of scenario where prices push to the upside from there. This little breakdown that causes a flush, trapping shorts, and the move back up there. As we always talk about the psychology of patterns and what they communicate, people's actions and beliefs. Where that day we were looking for, if we can get a move above that bottoming tail bar's high, we would get a retracement. Well, some of the patterns, obviously, in this tremendous move to the downside in a short period of time, haven't followed through the way they typically have. I mean, even this down bar followed by a big green bar and a big down bar typically would result in another sizable move lower. Didn't happen. And the bottoming tail, which was the breakdown failure type of a setup, didn't happen. And then we got, the inside day. And so here, where we had 2 days of stabilization, and if you look at this from the point of view of bar by bar analysis, we had a higher low. Because a higher low bar within a downtrend like this, what's the big deal? Well, if you're looking for a turning point, that subtle nuance, if you will, is the beginnings of a turning point. Whereas, this is obvious and just jumps out at you as that's going to go lower because of the big bar reversal. This little subtlety after a big down move like that in an area of support, after breaking through this little support there, is a classic setup for a counter trend move. So, and this is something I pointed out to in the advisory letter, that greater than 100 retracements are typically where the momentum, in this case, downside momentum stalls and you begin to get a reversal. Certainly didn't look that way last night when the futures opened at 6 o'clock Eastern and headed lower. But, we're getting the turn here. Let's see what happens by the end of the day, where if it can hold on to these gains. And well, I don't want to get too far ahead of myself, and what we're thinking here with our bias, but if this bar could turn into a giant green bar retracing up toward the top of that topping tail up here, well, that is going to be a monster turn after a greater than 100% retracement and a giant move to the downside. And we have to be looking for, obviously, longs. Now, okay, but it's in a nasty downtrend. So it's only a short-term point of view that, even a big rally isn't going to turn this trend around. But hey, we're active traders, day traders, active in swing traders. That's going to present an opportunity for longs intraday over the next couple of days. Put spreads would be no brainers if they have premium down there, and even debit spreads. So George is saying we need to create some support as we go. Yes, sure, Dave. If we're looking at, say, small time frames like the 5-minute chart, yes. But remember, in a situation like this, especially a news-driven market, things could get crazy, as people, relief. So let's see. We're here in the room. We're going to be looking at the intraday charts. We'll see how it all plays out. Now, you can see the 5-minute on the news, how it blasted to the upside, the wide range bar igniting. Things get a little climactic. Part of our conversations last week in the room, I don't remember which day it was, but we talked about initial bearish patterns like a reversal or a topping tail, and putting it in the context, is it the start of the move or is it something that's been running up for a while? So this initial reversal here isn't to be taken. I'm talking from an historical point of view. The market's been nuts, right, with different things. But from a historical point of view, this is something that should be discounted a bit, meaning expectation would be for it to fall all the way back because it's igniting out of a consolidation and the daily's been going down for a while. So what we'd like to see, to build up some support, but it again may not take that long. Now, this whole, this thing that's going on in the Senate, and the little, I guess, cutting up the pie that's going on there, who the hell knows? But that could be the next igniter to push prices further higher here as they come out and say, yes, here's the pot of gold here. We're saving the day, so on and so forth. So we'll see. Let me just look at the spiders here for a moment to see where they're at. 235, 236. They were as high as, I guess, close to 238-ish. And so a gap up to a big red bar. All right, so as you can see here on the 15-minute chart, this pattern here was beginning to follow through, and then it just kind of fell apart as, the buyers decided to go home on Friday, and then we got the sell-off into the close that created this big red bar. And yes, absolutely, that made it look like follow through to the downside. It opened up last night and down it went, and here we are. We're gapping up toward the high of this bar and into the area of it. So now we'll just have to see, how it deals with it here. And so I say, look to the left. It's always about looking to the left. No diagonal lines, no fib lines, none of the hocus pocus. What I'm going to do is look to the left, see where you're at. Is it creating support in a situation like this? So what we want to see here, let's even just say in the first 30 minutes or so, this is up, got up to 230, 238-ish up here. We want to see it jiggle around here a bit. And that's what we call absorbing supply. Sometimes I say, oh, that's, bullish price action. So what does that all mean? Well, what it means is this is resistance. It's gapping up, which has created a void below. There's no support, but buyers keep stepping up in the area of this resistance or supply. In other words, sellers are saying, wow, you know what? I got long this freaking market on Friday. I had a terrible weekend. The futures were down more. I'm going to get wiped out. And now I get to get my money back. Right? So that's the psychology of the pattern. Now, that being what it is, buyers continue to step up and it goes sideways here. And that's bullish price action or absorbing supply. So we'll see how that plays out. Qs or the futures here, retracing deeply into here and just spending all of these days where day to day, the craziness that's going on. And we look at our charts and you'll look at all this in retrospect, assuming some kind of retracement is going on, going to follow through here. So it looks like that's what's setting up for the moment. You'll look back on your charts and, you'll study this and say, why didn't I see that back at that time? And that's the learning process of, understanding technical analysis from the master trader point of view, not with indicators, and applying bar by bar analysis with what's to the left and multiple time frames. And that's how you begin to understand, the actions in the moment and expectations of, what should happen. So you look to the left and see you're at this prior support. And granted, this isn't the typical type of price action. There's wild stuff that's going on, but it's a different world with this virus. But that's what makes it such a great learning process. The typical patterns that happen, something more like this, more of a controlled kind of, down, up, down, and then maybe a gap up occurring down here. This is pretty wild, but it's wild times. So Qs and gapping up into 175.77. It's up in here. It's got room, obviously, to get back up to the high. But again, gapping up to resistance tells us, hey, sit on your hands here at the open and let's see what happens between buyers and sellers here. So the good news is baked in. We're waiting for the senators, right? Supposedly, the big Dems there looking, I guess, for their cut. We'll see what happens. And what are they going to do? They're going to have to succumb to the pressure. And that could be the next igniter that pushes prices up toward the high and then hopefully above. We get that retracement. All right. We're going to see pretty much the same thing everywhere. The Dow has been the weaker, but starting to turn, not as deeply into. I'm on the futures here. I don't know why this was where it is. But, as I look at this, sometimes, and here's a concept, is that the weaker one could be the better trade, meaning this doesn't have significant resistance. So if things are going to go up, this might be the better instrument to trade because, the way it went down faster. Right. So one of the MTS concepts is sometimes you want to go and trade the dog, meaning the one that fell faster because it's created this bigger void. So, that's an idea, one I'll be taking into the day. So far, prices are just consolidating. The Russell was doing similarly on Friday, and this was one of the trades that I did. I thought, well, this would move higher. It was the weaker, and it didn't happen. And kind of, the idea is, okay, we call it bringing up the rear. So that's up big here as well. And as you can see, this led the way down. But as you look at what's happening here over the last 5 bars or so, this is all in the same area, more so than looking at, the cues that it's kind of a chopping and down, whereas, this, you can see the lows are in the same area, higher lows anyway, a little bit of relative strength in what has been the market that has been showing the relative weakness. I think down over 40% in 3 weeks or so is a bit much. And, it's never happened before, not from a new all-time high. Anyway, so you've got the Russell here all the way back down into the area of the 2016 low. So a lot of devastation done in a really short period of time. And so we're here, 104.5, 105 area, went as high as, looks like around 107. So that's a nice size gap up. It's a good start to the day. We'll see if it can hold on to it. The transports, I don't know. They don't really tell us much, but this again is another one all the way down here to the 2016 low. We'll see where that opens, which Boeing got an upgrade today by Goldman Sachs. And, what's better about this one is that it was tight down here, meaning the smaller ranges, and you've got a red topping tail, and this is trading at 101, 102. So 102. It's not that significant, but it's got a giant void above. So, something that I'll be keeping an eye on for, I think should be a decent long trade if this market can get going here, considering how much it is down. And, we look to the left. Where is it? 2016 low. And this is the power of the void, everybody. Momentum move higher. There's no consolidation points, a very small consolidation points. And then 2 years of going sideways, of institutions saying, this is a buy. This is a buy. This is a buy. This is a buy. and then they have nothing to trade against, meaning where am I going to place my bid to add to my position? Well, we all know the news. Right? None of them probably want that. So they just unloading. And now it's all the way down here. And when you hear, a brokerage firm coming out with a recommendation and they're doing it here, you're like, those are criminals. You're looking at the chart. The one that's giving the recommendation after a collapse like this, still bad news out there, you can saying, hey, that's something to look at. Is this company going out of business? Anybody can go out of business. General Motors did, right? But you've got the government. It was amazing over the weekend, right? Where they were like 1 trillion, 2 trillion. And they're saying, well, with lending that we're going to do, it's upwards of $6 trillion. Right? So it was like, wow, you couldn't come up with $5 million to build a wall, but all of a sudden now there's $6 trillion out there that you're going to print. I mean, politics is just a crazy thing, boy. And now they're still, in there negotiating in times where, right, it's amazing. And you think about what's going on in Italy. Anyway, so oil, inside day here stabilizing, all the way down here, down from $20, right, from almost $70 to $20. When is gasoline going to be $1 a gallon? And bonds, what's going on here? Something going on here. These were up. Okay, that's when the news came out. Way down here. So we've got yields falling back down, and they're just flip-flopping around here. But, they had that little rally and back down again. Gold coming off of the low. So pretty wild markets here. Interesting. The euro just, the rally it had and the collapse back down. It's just amazing times with the range volatility expansions and so on. So it should play out to be an interesting day. And some of these, everything looks like it could be good long opportunities, but probably just sitting on the hands for a little bit will be better as we let things chop around here a little bit and play out. All right, all yours, Dan.
All right. Good morning, folks. Yeah, I even wrote in the letter. I said it's going to be very interesting how the futures gap up as I was finishing it yesterday. But then we got more news during the day. We got the more bearish news as predicted of coronavirus. That was just kind of a common sense given until we get cure or some good news, and then Senate unable to pass the bill. It's so sad. They just got to put all their junk pork bills in there. It's just, I just hate politics. Steve, you mentioned Boeing heading shoulders. Absolutely, on the monthly chart. And we were talking about that, and I talked in detail. If it didn't have these two bars right here, then we would have been core shorting it right there. And I know some people in our green trading room were core shorting it, like like Debbie. And then you just drill down to your daily and get on board. But I posted Boeing as a put spread over Friday's high. YouTube's asking about. Yeah, this is, we also wrote in the letter, this is just a dream for selling put spreads. We have a ton of open positions. I'll go through them real quick. But there's just going to be a field day. It's going to be shooting, fish in a barrel here of the compelling setups with the high VIX. And we'll just go through and try to pick the best ones. So YouTube's asking about space. We actually sold a put spread on this, out of the money put spread on Friday, gapping up here a little bit. I'm not sure if you're asking about a put spread or a directional long, but You know, big topping tail to make a directional. I'd like to see it get its sea legs back first. You know, put spread maybe over 30-minute high. That's not the best pattern right now with that big old topping tail. They're also asking about FEYE. It's up 4 bars with a topping tail, and there's so many patterns that I also wrote in the letter that they will be absolutely ideal for a W bottom. FEYE is one of them. We have a put spread in Hilton, but many of these that had a nice bounce, and then if it can come back and give us a W bottom with a reversal, no brainer put spread. Let me look at everything we're in, and everything we have a bunch of open trades in the weekly, and we took our profits on the VXX trade, and I just didn't want the weekend risk with the spiders just having a very ugly close. And when we were gapping down 500 to 1,000 points, I was, you know, high-fiving myself saying, oh, I'm glad we took our profits. But now with the gap up, the VXX is gapping down. And once we get the confidence of a reversal, which is not now, Greg made it very clear, it's just the start. You know, the bill's not passed. Just the CNBC and everyone's out there on the news and trying to tell Congress, you better get this thing passed today. Greg's buddy Pelosi wants to rewrite it, in which case, you know, they're saying it won't, you know, get done until Friday. I don't think that would be a good move, waiting till Friday to get this thing passed. One other comment on Boeing. Yes, I like Greg's point. I was thinking the same thing, that a big prime brokerage giving an upgrade after it's shellacked, as opposed to, yeah, when it was a head and shoulders top, that I like that too. You know, when the upgrades coincide with the pattern. All right, Debbie, good morning on VIX. All right, let me go through opens real quick here. And then we got some more gappers selling off here a little bit now. We had double tops pre-market, which just supports the stand on the sidelines here for a little bit. Applying our typical retracement concepts. You know, this move off the low, even the real body. We do, you know, we don't want this from the bottom of the real body to the top of the topping tail. I don't want this to go more than 50%. You see it's approaching the close. So if we approach the close here, then on the market daily charts, we're going to be opening flat, which is not a good thing in terms of reversal. It's not. We're opening flat from a nasty bar. All right, let me do opens real quick. AMD, we're short naked puts for Friday, the $36 ones. So it's under all that support. BAC, we have a put spread, 18.15. Delta, short out of the money, we shorted the $12 puts. And, you know, these things I think are going to be very critical what comes out of the legislation. So that's part of the risk in that trade. Home Depot, we're short the naked $100 puts. So still $52 away, and we booked half our profits. Lyft, we shorted the $14 puts. Beautiful. That's a potent wide range reversal. And we did Uber, his cousin, same day. We got naked puts on those, look good. Space, I mentioned put spread. Tesla, we did a put spread. And that's holding well, holding fine. Finally, Win, we shorted naked puts, the 36s. And these are all short term, they're for Friday. In the swinging options letter, we only have 5 positions. DRI, short the $15 puts. I cannot believe, hey Steve, you were asking me about juice. You know, how do we define juice? Juice is how much premium we're getting for the out of the money strike and for how long. Now I know this, and then you can also look at the VIX for the broader market and also the implied volatility for the individual stock. I like getting a minimum of 10% of the short strike out of the money. And we sold the $15 puts. Folks, think about that. $24 away, and we got $2 a share. That's crazy juice. I mean, how else can I define that? But crazy. That gives us a cost basis. This stock went from 122. And if we're assigned it, our cost basis is $13. 90% discount from February highs. That's crazy. Starbucks, we have a naked put, the $40 puts. Another example, this was 95 bucks. And if we get to have a cost basis under 40, NCLH is not a good one. We were assigned stock on this, so I'll be looking to leg into a covered call. And then finally, Hilton. Hilton was one. We also were assigned stock, so our cost basis, I see here 66.49, so it's against us a little bit. But this would be another one. Ideal, Marriott here, ideal for a W bottom. And that's it. That's all of our opens. I'm not liking the retracement right now, pre-market. YouTube asking about AAXN. Nice. You know, we've done MT lives on bottoming patterns. This one I like a lot. It's also your climactic. You had a bearish gap. You had a breakdown failure, wide range igniting, and it's not an inside bar, but it's still relative strength that held the upper 50%. And look over here on the weekly. You got yourself major support. So, hey, Steve, I was asking you about, you know, helping on going through the checklist. So that is a beautiful pattern. So now go through our checklist and tell me if it makes sense using our method of considering a, you know, 50-45 put spread. But yeah, I'm going to write that down. It looks good. USFD, if this can take out Friday's high, I like it because you got my 2-bar reversal, higher high, higher low bar, red bar ignored if it triggers. TOT. All right, all right, here's one, big old Gap Oil Company, 29.65. I saw in the paper they were, I don't know, restructuring or something, but this is an ADR, so it's gapier. Somebody was asking, what does it mean we're short of $20 put on win? It means that we took in money and we're obligating ourselves to buy win stock at $40 a share on or before expiration. I'm not liking this sell-off. I think this is all having to do with Congress right now. I don't have the news on, but that's what this retracement is telling me. That the public is just absolutely sick of Congress. Not that they weren't already, but this is just, it's like, I don't know.